listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy Byrne.
So today, Friday, August 14th, we got news that Berkshire Hathaway has bought nearly 21 million shares of Barrick Gold, or 1.2% of that company's stock. The news came from a regulatory filing. To be clear, Warren Buffett is buying a gold mining company. He's not buying gold. I don't know if Buffett has ever owned a gold miner, but recall he made a huge bet on silver in 1997, and that paid off as he sold later for a profit. Of course, it was Buffett's partner, Charlie Munger, who said civilized people don't buy gold. Now, this was an incredibly ignorant comment by perhaps a near senile old man, but nevertheless, I'd still like to punch that guy in the face. But then again, that old fossil would just prove me right for being uncivilized. Now, there are two takeaways from this. From Buffett buying Barrick, not from me wanting to punch Charlie Munger in the face. First, there is a time and season for all investments. You never want to be married to one investment forever, and at the same time, you never want to dislike or hate one investment forever. And no one investment is the best. Heck, even U.S. stocks from roughly 1906 to 1982 barely made any money in real terms. If you buy anything cheap enough and hold it for a while, you will do well. If you buy anything cheap enough or early enough within a bull market and hold it for the duration and sell at some point, you will do very well. But timing matters. This is the time for precious metals, and soon too for other commodity investments. Now, the second thing, the Buffett news, and there's also news that David Einhorn's Greenlight Capital bought GDX last quarter. These are signals of the mainstream starting to adopt and recognize the new bull market in gold and precious metals. These guys, they don't buy expensive things, and they aren't flippers. And they look for strong fundamentals. Now, this harkens back to my comments about the crowd usually being right. The crowd is most excited at tops, but they also get really excited around major breakouts, like we just had in gold. So sit back, buy weakness in the market, and enjoy the ride. We're going a lot higher over the next couple of years. That's it for today. Hope you enjoyed this commentary. Have a great weekend.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to thedailygold.com. And for premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.